But for 45 grand, this might be the greatest gaming graphics card you've ever installed. These things can only truly be recognized if the entire market does not collapse. Woo, baby, buckle in, strap up for this wild week in the market. This is gonna be one of those entertaining weeks, bullish, bearish, I don't really know, but I'm gonna be fixated on a lot of things coming down to the Canadian bank earnings. TDs posting this week. We gotta talk about the AI bubble, the boom. Is it a bust, or is it all-time high rocket ship prepared to launch with Nvidia's earnings coming out this Wednesday? There's so much going on. Consider hitting that like button because these topics fascinate me. But taking a look first and foremost at the watch list here on StockTwits, as per usual, most of my stocks are in the red. The VOO doing slightly okay thanks to some tech stocks going up, but my banks are down, my SCHD is down, and honestly, even tech rallying right now seems a little bit redundant. I've told you guys this could be a good buying opportunity here, but where the real rally is being is in Tesla, and it's being in Nvidia. Look at Nvidia up over 7%, Tesla holding up over 6.8% right now. Pretty astounding. And taking a look at the earnings this week, again, guys, Nvidia is going to be on after close Wednesday. I may live stream and subscribe for those updates. Lowe's coming out tomorrow. TD Bank is going to be before open on Thursday. You got companies like Affirm here Thursday after close. It's going to be a pretty fun week to watch, but Nvidia is the one that I am going to be most fixated on here because, my God, you know, they've been selling these chips, these H100s that took off, that Amazon AWS was loading up, Google, Meta, they've been loading up on these chips. And to buy a used one just on Amazon, I don't know if you personally are doing large language model, crazy compute power kind of programming, but for 45 grand, this might be the greatest gaming graphics card you've ever installed in your computer. I don't know who's buying these. They're absolutely insane outside of tech giants that have been able to get their hands on them. They're releasing new versions of these, I think, in the latter half of this year, and that's been driving the interest. They even have some crazy cloud computing program themselves that you could utilize for, you know, learning some AI models, but they're charging, I think, like $30,000 a month just to access it. So all eyes are going to be on Nvidia stock here, guys. I don't know if all of this has been priced into the company here. I mean, they do have some earning expectations around $2.07 on the average, high of 230, low of 170. Even if they meet expectations, I mean, they got to blow it out of the water this quarter to justify this insanity. And I'm still speculating. A lot of bears think there's going to be about a 15 to 20% correction here. I don't know if that's true. I'm not speculating on it, but I'm sure as hell going to watch with my popcorn, baby, because it's going to be fun. Now, on the Canadian banking side, they continue to drop. I mean, look at Bank of Nova Scotia here hitting another 52-week low with almost a 6.83% yield right now. Absolutely astounding. Again, these are companies that took their dividends. I mean, Bank of Nova Scotia is probably not the best example, from 60 cents to where it sits today at $1.06. Not exactly doubling. Canadian Imperial Bank's the only other Canadian bank damn near yielding 7%, 6.7 as it stands today, also hitting like a 52-week low here. And taking a look, this one a little better, from 47 cents to basically 87 cents, almost doubling. I think a little better than Bank of Nova Scotia. But I want to talk about, you know, the Canadian economy, why these banks have so much fear around them, because let's use National Bank. We'll talk about TD and Royal Bank in a second here, but National Bank has been arguably one of the best performing banks. It's up 52% over the last 5 years. Dividend not as high, but 4% still very attractive. But what's so intriguing to me, one of my bull theses is here, as the higher interest rate environment continues to put, you know, the smelting heat on people that have huge mortgages, they got to come up for renewal in the next year. You know, the credit quality of those mortgages and people's line of credit and their corporate debt start to cramp on them, and they start losing that AAA rated quality. They have to put those loan loss provisions aside to protect themselves. But I think people are underestimating the insanity of how much revenue this has generated these banks. I mean, you're talking about a 71% increase on the last quarter. You know, for, you know, National Bank here. I mean, these are numbers we've never seen in the past, yet these things can only truly be recognized if the entire market does not collapse. That's the reality of it. That's my bull thesis. I'm telling you, as soon as we shake out the faulty loans and, you know, things start to stabilize in this new high interest rate environment, which is never going back to where it was, but I am pretty bullish and, you know, speculating that sometime probably spring or summer next year, they will start cutting rates. It just won't go back to zero. These banks are going to print more money than you can possibly imagine, because right now they can't actualize this, and that's what has people so scared, right? We'll take a look at TD, but National Bank from 44 cents, 42 cents 10 years ago, their dividends at $1.02, over doubling of the dividends. So let's fixate on TD. Let's fixate on Royal Bank, the two largest banks, the most monopolistic banks Canada has to offer, and some of the best performers of the bunch as well. You know, Toronto Dominion's down 4.7% with a 4.6% dividend yield. This one not hitting a 52-week low, actually holding up pretty good, because I think it got over brutalized, as mentioned in the you know, the sale of, what is it, First Horizon or whatever that regional bank was in the US. So it is holding some highs better than, say, BNS is, and the dividend's a little more resilient, going from almost 40 cents a decade ago to 96 cents. So again, again, over a doubling of the dividend. But again, revenue numbers are absolutely bonkers. I mean, their trailing 12-month are numbers unlike we've seen for the last decade. I mean, this is like tech kind of growth in revenue, right? But what I want to show you here is and as soon as they're able to, because when we take a look at basically their net income sitting at 3.5 billion from this time last year when it was 3.6 billion is declining. It's like, how is that happening? Again, it comes down to them having to back up the faulty debt. They put 599 million away in loan loss provisions versus this time last year when they were only putting $27 million away. I mean, the trailing 12 month of loan loss provisions is 1.28 billion, or sorry, I think this is, year to date. So the 6 month, $1.28 billion in loan loss provisions versus 99 million. Can you imagine what that's going to look like when they can actualize these numbers they have to put aside for the fear that debt's going to start to evaporate? I mean, really, if you think the entire Canadian market's going to collapse, don't buy the banks. I mean, honestly, that's the bet we're making here, right? It's either the entire economy collapses or inevitably they're like, hey, we've put enough money aside to, make the regulatory guys happy again, and we're able to actualize over $1 billion in revenue, and that hits our bottom line, taking our net income to 4.5 billion, increasing it by like 20 or 30%. That is the inevitability that I think is coming. Look at Royal Bank here, another conglomerate. I got fairly large positions in these. I mean, we're talking about a 4.5% yield. It's down 3.95%. Very similar with the dividend from 60 cents to $1.35. Absolutely astounding dividend growth. Again, these things survived 2008, but that was what was going on in the U.S. market. You got to remember, no recession is alike. These banks have become world renowned for their performance through rough times, but that's because those rough times were happening more on a global scale than they were in our own country. But now people think Canada is the one with the lowest credit quality because the debt to income ratios are getting out of control. But look at Royal Bank. This is freaking insane. $70 billion on the trailing 12 month. We're talking about 88% increase in revenue. I mean, how over year quarterly revenue growth, absolutely astounding. Again, the last time they experienced this, they've never experienced this. I don't think there's any time in their history where they got 88%, especially at the scale and the scope of how big these numbers are today. I don't know how people just brush this off as higher interest rates. Obviously, if they cut interest rates, it's going to lower this a bit, but again, it'll nominalize, but it's never going back to where we were here. I mean, this is what it looked like in low interest rate environment. This is what it's going to look like in this new high interest rate environment. I'm telling you, there's money to be made here at some point. Again, unless you think the whole thing's collapsing. So look for provisions for credit losses here, also pretty ridiculous, 600 million versus what this time last year when they did 342 million, give or take. They're sitting also at 1.1 billion versus 237 million over the first 6 months of this year. Imagine over a 12-month period, they're going to be putting over $2 billion aside that could have hit their bottom line. Absolutely astounding. Look at this net income, 3.6 billion, which is actually a lot lower than where it was last year because again, loan loss provisions, right? They had 4.2 billion this time last year. So let's bake in an extra $1 billion. I mean, God, these numbers are going to get crazy here soon, guys. I don't know if I'm just the only one seeing this or if people are just blind, but I'll pass that question off to you. I'd love to know what you think in that comment section below. I'll be fixated on these bank earnings this week. It's going to be fun. It's just going to be fun. But let me know what you think in the comment section.